Hallmark Institute of Professionals. Register for Business Management, ICT, Sales and Marketing, Purchasing and Supplies, Banking and Finance, Community Development, Project Management, Graphic Design and Digital Marketing. Enhance your professional competency as a CHRPK, CPAK, Certified Secretary, Insurance Specialist, Trust Secretary and courses in Pension Management. Check out our annual training calendar and corporate trainings on our website or call us on 0708 355 941 or 0700 031 162 or visit our offices at Caxton House opposite GPU in Nairobi. Hallmark Institute of Professionals. Transforming lives.
So I'm trying to share my screen for Equities. Just a moment.
So as John does that, I think somebody was asking, can you invest in both treasury bills and bonds using one CDS account? And then there was confirmation whether 15% taxation is on the interest. Yes, that is on the interest. And I like the point at which you have concluded, John, on the quote about the people who like holding cash. And I think this is the one of the reasons why we are having this conversation. Instead of they normally say keeping that money under the pillow. I don't know whether that still happens, or in that bank account where it keeps diminishing because of the administration costs. Then treasury bills, treasury bonds are some of the opportunities that are available for us to keep that money for an interest and some benefits. Saying this as we give John the time to share the screen.
So thank you. Yes, Irene, you asked a question that is it possible to invest in both treasury bonds and treasury bills in the same CDS account? Yes, it is. When you open a CDS account, these are accounts for both treasury bonds and treasury bills. So yes, you can invest any at any given time. What you cannot do is to invest in equities, that is shares, because you will need a different account altogether. So that it's possible to do both treasury bills and treasury bond. So we can proceed, Irene. So I hope my screen is visible.
You're good.
Okay, so just a moment. I am unable to move my slide on my end. Trying to fix. Okay. So, okay, there you go. So this is the outline of this presentation. We look at the definition of shares, the benefits of owning shares, the risk of owning shares, the corporate actions, the primary and the secondary markets, and the trading process. So we want to look at what are shares, and the shares are basically the ownership of a company. And when we talk about shares, it's basically you will hear mentioning shares, equities, and even stocks using the three names interchangeably. It basically means the same thing, that is owning a part of a company. And they are classified into two, that is the ordinary shares and preference shares. So just as the name suggests, ordinary shares, it doesn't have any preferential right. Unlike for preference shares, this one has special rights. That is, for example, when the company is winding up, then the preferential shares holders are given the first priority in the payment of their share capital, while the ordinary shares will receive what is called residual rights. So they are given the rights for the preference shareholders comes before the ordinary shares. We like to look at the benefits of owning shares. What do you benefit from owning the share of a particular company? One, it is dividends. You get dividends through that is the profits declared by the company. The second one is the right to vote. That is you get the right to vote by owning a share in a particular company, because you'll be required to attend the annual general meetings. The capital gain. What is a capital gain? It's a change of value or the increase in value of your assets. So you benefit through capital gain, and this one is realized when you sell the asset. The preemptive rights. What is a preemptive rights? These are rights, is a special right which is given to shareholders, existing shareholders, to purchase stocks if they are issued before being issued to others. So basically, those are the four benefits of owning shares. I want us to look at the risk involved in shares. One is a liquidity risk. This one is the ability of the issuer to pay, or to even to pay the shareholders. The issuer risk. This is these are the risk, the insolvency risk of the issuer. Foreign exchange risk, which is the change of the currencies due to inflation or due to change in the currency rates. The price and the market risk. Second is the next slide is the corporate action. That is, these are actions which are done by the company which can affect the shareholders or even the creditors of the company. One is dividend. That is the payout of profit. We have what is called a bonus, scrip, or capitalization issue. These the existing shareholders get extra shares but no payment. We have stock splits. That is, you can split the number of shares into smaller shares for it to be avoidable. And then the reverse stock splits, which is now consolidating the shares, unlike the stock splits. The company meetings, which is we have AGM, which is an annual general meeting. The EGM, which is these are extra general meetings. These are the kind of meetings held by the companies. We move to the capital market. So what's a capital market? So basically, this is a platform whereby the buyers and the sellers meet to exchange the capital. So they are divided into two. One is primary market and secondary market. A primary market is this issue the new shares for the first time. They raise capital and even merge the surplus funds to investment opportunities. The secondary market, on the other hand, is they allow primary market to function effectively and even facilitate the two-way trade of securities. So it supports the primary market. For example, I mentioned the issuance of treasury bonds. It is when it is being issued by CBK, that is a primary market. And then secondary market is now when it is availed by the investment managers or the brokers. And this one, it offers you a second chance. If you bid the primary and you never you are never successful in the bid. I want to look at the trading and the settlement process. It starts with the client, which is yourself, if you are trading on these shares. So the client here makes the application for opening of the CDSC account. You can place an order, fund this account, you withdraw from this account. We have the broker here, which now opens the CDSC account for the client. They participate in the execution of the orders by the client, and also get a read-only access to CDSC trade. So here brokers can even communicate directly to CDSC. We have the NSE, which is they host now the trading platform, that is the Nairobi Stock Exchange. They offer the platform for trading of these shares. CDSC account is, the CDSC is basically the depository system which reflects the client holdings. It is it's a Chinese wall among the brokers. Chinese walls here means it was a term used to portray the Chinese. It was a Chinese wall which was used to protect the enemies during the ancient time. And finally, the CBK, which now helps in the settlements of these the broker commission and the rest. So basically, this is the trading and the settlement process. It starts from the client all the way to CBK, who does the settlement. Now, the settlement cycle. This one takes one to that T, there's a transaction date with the trade date plus 3, which is now, so the settlement date basically is a T plus 3. So if you initiate transaction on Monday, then Tuesday will be T plus 2, Wednesday T plus, Tuesday T plus 1, Wednesday T plus 2, and Thursday is a T plus 3, which is now the settlement date. Second last year is the transaction charges. Remember, there are small levies on these transaction on shares. We have here the NSE levy, CMA. CMA is just Capital Markets Authority. CDSC, which is Central Depository for Securities Corporation. Transaction levy, CMA Guarantee Fund, CDSC Guarantee Fund. It charges a portion of the investment, and even the stamp duty. And finally, here is there's a quote by Warren Buffett. That is, I will tell you how to become rich. That is, close the doors, be fearful when others are greedy, and be greedy when others are fearful. The most important quality of an investor is temperament, not intellect. So I would add by saying you purchase when everyone is exiting, and you sell when everyone is coming in. So basically that is what equities entail. And I now welcome your question and answers. I welcome your questions, and then we go through the whatever is in chat box. Irene?
Yes, John. We already have questions that have come through. There is one that had been asked earlier. I think I'll recheck it. But when and how do I sell once I have bought the bills and the bonds? That was still on the treasury bills and the bonds. And can one invest in a way to earn every month? Bandu, talking about the bills and the bonds, as I recover one of the questions that they had been asked and not answered.
So thank you, Irene. The question is, so when and how do I sell the bonds and the bills? One is once you purchase a treasury bill, this one you cannot sell it until it matures. You will wait until the maturity of a treasury bill. There's an exceptional situation called treasury bill discounting, but it is highly discouraged. And when you sell this treasury bill, the CBK over punitive rates so that it discourages the selling of treasury bill. But basically, most cases, treasury bills are held until maturity. For treasury bonds, this one is very easy. You can do it through secondary market. That is, when you want to purchase, to sell your bond, then you float it to, or you offer it for sale through a broker who now link you with the seller. So for treasury bond, yes. And the price for this treasury bond depends on the market price at that particular moment. So you can sell treasury bond before maturity. Now, can I invest in a way to earn every month? Yes, you can do what is called bond layering. So bond layering is, I've mentioned that treasury bonds, they pay interest after every 6 months. So you can select treasury bonds, which if you select 6 of them, and then it's layered in a way that it will earn you, each of them will earn you interest after every 6 months. So you will basically earn from January to December, provided that you layer your bonds in a way that both the yields are getting the interest from January to December. This one you can be assisted to layer your bonds through investment managers, or you can even select a bond yourself, which can pay from January to December. So it's layering of bonds. You can purchase 6 different bonds and make it in a way that each and every one pays interest from January to December. So I think that's the last question you asked, Irene, unless there is any other question.
Yeah, so John, and I think this is quite related to, I know people are asking, should you go through a broker or an investment company, or is it okay to go it alone? And that brings us now to the other question that I was tracking from Dorcas, who was asking, does one have to monitor their bills or bonds every time, or at the end of maturity, their interest and principal will just be deposited into their account? And I think, John, as you wind up, you can mention the, why is it important that we go through investment advisors, brokers, and the experts that are basically in the market doing these things. I've heard you now introduce the aspect of layering, and unless somebody really wants to, go to another level and become an expert in a way, then that's where now the experts are coming in. Maybe you can mention that as you wind up, and also tell us whether you would be available to work with individuals who are ready, because I believe some of us are ready to action.
So thank you, Irene. So investing through registered investment managers or brokers, this is quite advisable because these are the experts in the industry. So it's advisable, especially for beginners. If you are starting to trade these instruments, they can assist you in even looking for the best bond to purchase, or the best treasury bill to purchase, or as well which can suit your need. These are the experts who can take you through the types of bonds which are available. They can show you even how to earn your interest after every the 6 months. They can show you when and how your bond will mature. So yes, I do recommend that you use registered brokers to open these or to purchase a treasury bond. But better still, you can still open these accounts directly with CBK because it doesn't have any charge. And as long as you can monitor the issuance of the bonds through the CBK website. I mentioned that they auction every month for FXD. For IFB, they auction it once in a while. Treasury bills, they are auctioned every week. So if you choose to invest directly with CBK, then make sure you check their website. If you use these experts, and then they will be now advising you on when to invest or the best rates in the market. So it basically depends on the person preference, but each and every has its own its own strength. On the last one, that is the interest and the principal. That do I need to keep or to monitor? This is what happened to these instruments. Once you purchase a treasury bond, and then after every 6 months, then CBK will credit your bank account. Remember, I mentioned earlier that you need to link, you need to have a bank account so that you open a CDS account, because your banker will need to stamp on this card. And then, so after every 6 months, it is credited for treasury bill as well. When it matures, and then it's credited to your bank account, not unless you issued a rollover instructions, which now you can now keep the money in the CDS account until you bid for the next bond. So I saw a question. Someone requested for my contact. Yes, I can provide my contact on the chat. And finally, I think that's the last question on that chat box, Irene. So Irene, if you can hear me, I think that's the last question. So as I wait for Irene, I have seen a question on the chat box that is, how much can I start with? For treasury bills, you need a minimum of 100,000 to start with. And for treasury bonds, then it's a minimum of 50,000. Unlike for treasury, the IFB, which is needs a minimum of 100,000. So moving to the last one is, so I've answered what is the least amount I can start with. So, and the last one is someone is saying, thank you, very enlightening. So thank you so much. I think I've lost Irene. I don't know if we have Christine online so that we can conclude.
Yeah, I'm back.
Oh, so thank you, Irene. I was answering the last question, which someone asked about the least amount you can invest, and I've mentioned for treasury bills, it's 100,000. Treasury bond is 50,000, but IFB, the least you can do is 100,000. So basically, that is the least you can invest. So I think, Irene, if there is any, I think that's the last one, unless there's any other question.
Yeah, I think we can leave it at that, John. I hope I'm audible.
Yes, I can hear you, Irene.
Yeah, then somebody had asked that you could share your contacts. I don't know whether you're able to share that on the screen or.
Yeah, sure. That's I can share. My contact is, let me see if I can project on the screen. It was on my first slide about treasury bonds. Let me pull up this one and then share.
Yeah, so as you do that, I think our participants, thank you so much for joining today. I think we went to a point where we were almost full house, but as John shares I can see his email address there and his number. And in case you are not able to reach out to him, we are always happy to connect you with the experts that can hold your hand in different ways. Just to mention that at Hallmark, we have a page. I shared the invite to join if you're willing, or if you're not there, where we have, we do life skills trainings. And for me, I believe this is one of them, that it attached to financial wellness and financial freedom. If you remember the last time we handled something to do with social security, we've also done a training or a session on pre-retirement planning. And so remember, I normally say retirement, life starts at retirement, but only if planned for. And this is one of the ways we can be able to enjoy our retirement if we are able to diversify our investments and be able to gather in returns from diversity of channels in as far as income is concerned. So if you are not on that page, feel free to join so that you can get quick updates on what will be coming up next, because we are very passionate about financial wellness. And so we will be bringing us more about opportunities for investments, because we are saying again, let's spread our eggs and not put them in one basket. So thank you so much for joining. And once again, our facilitator and our pilot for the day, John, we are so very grateful for your time and for agreeing to give us your, the expertise that you've gathered over the years. We don't take it for granted. And so we just want to say once again, we appreciate. For the rest of the participants, I normally say from where I sit at Hallmark, Irene is my name. I'm the principal as well as the managing director for Hallmark Institute of Professionals. And I not only look for students or learners, I also look for trainers, for consultants, for facilitators. So if you know there is an area which you're very good at, we are glad to give you a platform and an opportunity so that you can share that knowledge with others. So feel free to reach out to us. You can call the office lines, you can reach out to Christine, you can reach out to me, and we will be glad to hear what you have. So other than that, I think it's a blessed night. We can close it and say we have achieved much, but we will not have achieved until we have implemented the things that we have learned. I'm seeing a lot of compliments on the messages. And so thank you so very much. Let us follow up with John. Let us follow up with myself and with Hallmark and see how much more we can be able to achieve and attain our financial freedom and financial wellness. Have a blessed night. I declare you're blessed and highly favored as you work hard. May you be fruitful, and may your seed continue to multiply even as you put it in the right places in Jesus' name. Amen. Have a blessed night.
You too.
Thank you.
Thank you, and have a blessed night as well.